All right, let's dive right in. Today we're tackling BlackRock. You've probably heard the name, maybe even some of the wilder theories swirling around them. We're talking about a company managing $10.6 trillion.
Wow.
That's more money than most of us can even fathom.
Yeah.
More than half the entire U.S. GDP.
It's really hard to wrap your head around a number that big, and I think that's part of what makes BlackRock so fascinating and also a little bit intimidating for a lot of people.
Yeah, definitely. And for a firm with so much influence, most people, I think, don't really fully grasp what BlackRock actually does, right?
Right.
They're not running a bank, they're not lending money directly. Their power is, it's more subtle. And
Yes.
and that's really what we're going to try to unpack today.
Yeah, exactly. It's not about them, controlling everything in some kind of mustache twirling villain kind of way like you see in the movies, but more about understanding how their decisions ripple through the economy and potentially even your own investments.
Right. And to do that, we kind of need to start with the basics, which is index funds and passive investing.
Yes, this is really key because it's the foundation of BlackRock's entire business model. Index funds were revolutionary back in the 70s.
Okay.
They basically let you buy a tiny little piece of every company in an index like the S&P 500. Think of it as like a diversified basket of stocks instead of, betting on individual winners or trying to time the market.
Right. Makes a lot of sense. Spreading your risk like that tends to be safer in the long run. And I guess it's also cheaper for companies like BlackRock to manage, and they can offer these more consistent returns.
Exactly. It's low risk, it's more efficient, and so it's no surprise that these funds have just become insanely popular over the last few decades.
Yeah, for sure. And so this popularity, I think this is where things start to get really interesting.
Yeah,
Because think about it, your 401k, pension funds, insurance companies, they all use index funds.
right.
So a huge chunk of everyone's money ends up flowing through these vehicles, and who's managing a massive portion of those?
Well, that's BlackRock along with a couple of other big players, State Street and Vanguard, sometimes called the big three of asset management.
Right, the big three. So that brings us to this idea of universal ownership,
Okay.
which we've been hearing a lot about. They own a slice of almost every publicly traded company out there. We're talking 3 to 10% stakes, which again might not sound like a lot.
Right. It doesn't sound like majority ownership or anything like
Right, but when you consider the sheer size of these companies,
that. Uh-huh.
even selling off a small portion of that ownership could tank the market.
It would cause huge ripples, yeah.
So they're almost forced to be passive investors in a way, right? They
Right.
can't just be buying and selling on a whim like, somebody trading individual stocks.
Exactly. They're kind of stuck.
It's like almost accidentally becoming the kingmaker.
Yeah.
They didn't set out to rule the financial world,
Right.
but their ownership structure has given them this influence that's really hard to ignore.
Yeah, and that influence ties into this larger trend that we need to discuss, which is this idea of shareholder primacy.
Okay.
Since the 80s, there's been this increasing emphasis on maximizing profits for shareholders, often at the expense of things like, worker well-being or long-term sustainability.
So companies are more focused on just pumping up their stock price in the short term, even if it means cutting corners or not paying their employees a living wage.
Yeah, exactly. And so where does BlackRock fit into all of this? Well, as the largest shareholder in most of these companies, they get a big say in how those companies operate. They vote on things like executive compensation mergers, all those big decisions that impact not just profits, but also worker pay and corporate strategy.
So even though they're technically passive investors in a way, they still hold a lot of cards,
Oh,
right?
yeah, a lot of influence.
And this brings us, I think, to a really interesting question. Could BlackRock's universal ownership actually be linked to the rising prices we've all been experiencing?
Ooh, that's a good one.
Right.
It's a little bit counterintuitive, right? Because you'd think as a major shareholder, they would actually want lower prices to benefit consumers, right?
Right.
But think about it this way. They own a piece of all the major players in a lot of industries.
Okay, so let's say they own shares in all the major airlines.
Right.
They wouldn't necessarily want to see some big price war that cuts into everyone's profits, even if it means cheaper flights for us.
Exactly. It's more profitable for them if all the airlines keep their prices relatively high, even if it means we have to pay a bit more for our plane tickets.
Wow.
So this is actually a big debate among economists right now. Does this universal ownership structure disincentivize competition and potentially contribute to price increases?
Interesting.
Obviously, there are other factors at play like inflation,
Sure.
but BlackRock's role in all this is definitely worth considering.
Absolutely. And let's not forget, their influence extends way beyond just the boardroom, right? We often hear about this revolving door between Wall Street and Washington.
Oh, yeah?
BlackRock is, I think, a prime example. They hire former government officials. Their executives hold positions in these powerful organizations. It's a whole web of connections.
Very cozy.
Yeah, and this influence has very real consequences. During the 2008 financial crisis, BlackRock was actually advising the government.
That's right.
And some argue that that was a major conflict of interest given their own stake in the outcome.
Yeah, it's a bit like the fox guarding the hen house, isn't it?
Exactly. And then remember the push for stricter regulations after the crisis?
Uh-huh.
BlackRock managed to avoid a lot of those, showcasing their lobbying power.
They know how to play the game.
Yeah, for sure. Now prepare for something I think truly mind-boggling.
Okay.
The biggest investors in BlackRock are
Who is it?
Vanguard and State Street.
Oh, wow.
And guess what the biggest investors in those firms are?
Don't tell me BlackRock.
BlackRock and each other.
Whoa.
The big three essentially own each other.
It's a closed loop.
It's like a financial Ouroboros.
What's that?
A snake eating its own tail.
Ah, I see. So profits are just circulating within this tiny little closed loop, potentially at the expense of, everyday investors like us.
Right, and it raises all these questions about transparency and potential conflicts of interest, but there are, I think, some potential solutions emerging, right?
Well, yeah, there's definitely growing momentum to regulate asset managers like BlackRock more tightly, similar to how we regulate banks.
Okay, makes sense given their size and influence. I think having stronger oversight seems pretty reasonable.
Yeah, and another idea that's gaining some traction is this whole idea of strengthening shareholder democracy, giving individual investors more of a say in how their money is actually being used by these giants.
Right, so things like proxy voting reform, greater transparency.
Exactly, things that would actually give everyday people a real voice.
Right, which would be amazing, but is that even realistic? I mean,
Well, it's a challenge for sure, but there are groups out there actively working towards that goal.
okay.
And then there's this other potential wild card that's been thrown into the mix, this idea of Bitcoin as a reserve asset.
Bitcoin, the cryptocurrency, how would that even work?
Well, you might have heard of David Sachs. He's a former Trump appointee who's been advocating for a U.S. Bitcoin reserve.
Wait, so you're saying a sitting U.S. president is actually open to holding Bitcoin?
It's definitely on the table, and some proponents believe that this could actually disrupt the current financial system, potentially empowering individual investors in a way that we haven't seen before.
Okay, so lots to unpack here. BlackRock's power tied to index funds, this universal ownership, has all these surprising implications, and their influence goes way beyond just picking stocks.
It's a really complex system, and it's important, I think, to understand these connections because they're impacting all of us, whether we realize it or not. But we haven't even touched on the meme coin craze yet.
Oh, right, meme coins. It's almost hard to believe we're talking about this in the same conversation as BlackRock managing trillions.
It is a little wild.
But then again, we're talking about a sitting U.S. president launching his own meme coin.
It's definitely a sign of the times. Yeah, it's wild. I mean, meme coins, they represent this crazy collision of internet culture and finance and now even politics. I mean, easy to dismiss them as a joke,
Yeah.
but I think their popularity and potential impact shouldn't be ignored.
Right. So for those of us who aren't, deep in the crypto world, break it down for us. What are meme coins?
Okay?
I mean, do they even have any real value?
Well, unlike Bitcoin or Ethereum, which actually have underlying technology and real-world use cases, meme coins are usually created as a joke or just to capitalize on some kind of internet trend. I
Oh.
think Dogecoin, Shiba, they often lack any real-world utility or intrinsic value.
So it's basically like buying a digital collectible and hoping its price goes up just because of hype?
Yeah, in a way, and their value is largely driven by speculation, social media trends, and community engagement.
Right.
And with TrumpCoin, you have this added layer of a president's involvement, which obviously adds to the speculation.
Yeah, it's definitely a gamble, but speaking of gambles, we can't ignore the other big question in the crypto world, altcoins. Is this finally the year we see alt season, or is that just a pipe dream?
Alt season, the eternal question. Well, the crypto market is notoriously unpredictable, but there are, I think, some interesting signals right now for one development in the altcoin space is still very active. We're seeing innovative projects popping up in areas like DeFi, NFTs, Web3 gaming.
Okay, so the innovation hasn't dried up. That's good. But what about institutional investors? Are they finally getting interested in altcoins?
That's the million-dollar question right there. Several firms have already filed with the SEC for altcoin ETFs.
Okay.
If those get approved, it could open the floodgates for institutional money to flow in, which would be huge.
Right. That seems to be the magic ingredient everyone's waiting for. So are you saying there's hope for all the altcoin enthusiasts out there?
I'm saying there are definitely factors that could potentially drive a significant rally in the altcoin market.
Okay.
But, caution is always key. The crypto market is volatile. And it's important to understand the risks before diving in headfirst.
Wise words. Now let's zoom out for a second and think about the big picture. We've got BlackRock with its immense power meme coins capturing the public's imagination, the potential for an altcoin surge. What does all of this tell us about the future of finance?
I think it paints a picture of rapid evolution and disruption. Technology is transforming traditional financial systems.
Right.
New asset classes are emerging. The lines between finance, politics, and culture are increasingly blurred.
Yeah, it's a lot to keep up with.
It is.
So as individual investors just trying to make sense of all this, what should we be doing loading up on Bitcoin, diversifying into altcoins, sticking with traditional investments?
Yeah, that's the big question. And unfortunately, there's no one-size-fits-all answer. It really depends on your individual risk tolerance, financial goals, and your understanding of the market. But this deep dive, I think, has highlighted a few key takeaways that are relevant to everyone.
Okay, I'm all ears, lay some wisdom on us.
Our first and foremost knowledge is power, understanding the forces at play. The rise of index funds, the concentration of power among these asset managers, the growing influence of crypto. This is crucial for navigating this new financial landscape.
So stay informed, do your research, got it, what else?
Second, don't underestimate the importance of critical thinking. We're bombarded with information from all sides, especially in the fast-paced world of crypto. So question assumptions, consider different perspectives, and make informed decisions based on your own analysis.
Yeah, it's easy to get swept up in the hype, especially when you hear about, a president launching his own meme coin. What if a final piece of advice?
Remember that finance is ultimately about people. It's about how we create, manage, and distribute wealth. It's about the choices we make as individuals, as companies, and as a society.
So even though we're talking about these massive institutions and complex trends, it ultimately comes down to our individual decisions.
Exactly, whether it's choosing where to invest your savings, advocating for policies that promote financial inclusion, or simply educating yourself about the forces that are shaping our world, you have a role to play in building a more equitable and sustainable financial future.
Wow, that's pretty profound. Okay, so we've talked about the power of BlackRock, the meme coin frenzy, the potential for alt season, but let's circle back to that initial question. Is BlackRock really controlling everything?
Well, there's certainly not some evil masked mind, pulling strings behind the scenes, but their vast ownership, their political influence, and their impact on corporate behavior definitely give them an undeniable level of power and responsibility.
It's kind of a scary thought, isn't it, that so much power is concentrated in one company?
It's a valid concern, and it underscores, I think, the need for greater transparency, accountability, and perhaps even regulation of these massive asset managers. But let's shift gears again for a moment. What about the possibility of a Bitcoin reserve? Do you think that's a realistic scenario?
It's hard to say for sure, but the fact that it's being seriously discussed by policymakers is a testament to how far Bitcoin has come.
Absolutely. Just a few years ago, it was seen as this fringe asset. Now it's being considered as a potential reserve asset by the government of the world's largest economy. That's a remarkable shift in perception.
And speaking of shifts in perception, what about meme coins? Do you think they're just a passing fad, or are they here to stay?
Meme coins have definitely captured the public's imagination, and their popularity is undeniable, but whether they have staying power remains to be seen. Their value is largely driven by sentiment and speculation, which can change very quickly.
It's like trying to catch lightning in a bottle.
Precisely. And while some meme coins might have their moment in the sun, it's unlikely they'll replace Bitcoin or Ethereum as foundational assets in the crypto ecosystem.
So we might see more meme coins popping up, but approach them with caution.
Absolutely. Always do your research, understand the risks, and never invest more than you can afford to lose.
Wise words. Okay, we've covered a lot of ground in this deep dive. BlackRock's power, the meme coin craze, the potential for alt season, and the future of finance itself. But before we wrap things up, I want to leave our listeners with one final thought. Throughout this whole conversation, we've been, analyzing these massive forces that are shaping the financial world, index funds, passive investing, the power of these asset managers, the rise of crypto. It kind of makes you wonder, where does individual agency even fit into all of this?
That's the crucial question, and one we should all be asking ourselves, right? It's easy to feel overwhelmed, like we're just along for the ride while these giants make all the decisions. But, it's not entirely true.
So even with BlackRock managing trillions meme coins going viral, the future of finance seemingly up in the air, we still have choices to make.
Absolutely. We can choose where we invest our money, what companies we support with our purchases, and how we use our voices to advocate for change. It's about recognizing that we're not powerless, even in a system that can feel very large and complex.
Right. I like that it's empowering instead of just, getting lost in the doom and gloom of like big corporations control everything. We can actually focus on the areas where we do have some influence.
Exactly. And that starts with understanding the issues, which is, what we've been doing in this deep dive.
Right.
We explored BlackRock's power. We dissected the meme coin phenomenon. We analyzed the potential for alt season.
And while we might not have all the answers, I think we've definitely uncovered some important questions and gained a deeper understanding of this evolving financial landscape.
Yeah, and that's the key takeaway. I hope listeners walk away with the importance of continuous learning and critical thinking, whether it's researching potential investments, questioning the narratives that we're presented with, or simply seeking out diverse perspectives, engaging with these topics is crucial.
Yeah, especially in a world where information overload is constant and everyone from politicians to social media influencers is trying to sway our opinions
Right.
and our wallets.
Exactly. The future of finance isn't something that just happens to us. It's shaped by the collective choices that we make every day.
It's a powerful thought. So whether you're a seasoned investor or just starting to explore the world of finance, remember that you have a role to play in shaping a more equitable and sustainable future.
Couldn't have said it better myself. It's been a pleasure diving into these topics with you, and I hope our listeners found this exploration insightful.
And a big thank you to everyone who joined us for this deep dive. We'll be back next time with another fascinating topic. Until then, keep exploring, keep questioning, and keep diving deeper.